Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, the rats are leaving the ship. We're going to tell you exactly what that means, why we're saying that, and why you need to heed the warning. So let's dive in.
Trade Genius.
Hey guys, really briefly before we jump into this video, appreciate all the likes and subscribes. And if you can ring that notification button, that really helps us out. In addition to that, if you guys don't mind, head over to tradegenius.co. Check out our specials we have over there. There's a number of different specials with different packages for all different experience types. If you're more into education, we have a package for that. If you just like to get into the room, primarily, we have a package for that as well, where you can see where we're calling out trades and things like that live and also posting signals into our Discord signal rooms. So check it out, tradegenius.co. Appreciate you doing that. All right, Bob. So, everybody's pretty euphoric with this market. AI just never seems to stop. And, you got crypto popping off yesterday, although they gave some back. But, a lot of euphoria in the air from everybody. That's whether they're investing in crypto or investing in the stock markets. But you found some interesting data. I found some interesting data. Let's talk about it.
Yeah. So, this move that we've been dealing with is it's been relentless because what they've been doing, Phil, is that they've been adding calls upon calls upon calls upon calls.
Right.
And when they do that, they basically force the dealers to go along with them.
Right.
And that when that happens, it's that they call it negative gamma. They force these people to go along for a ride. It's like being carjacked. Okay, you're going along for the ride. But what they've been doing behind the scenes is that they've been selling their shares to people who've been covering their shorts, and they've been riding long calls. Well, this next chart we're going to show you is showing you that they stopped doing that, and that is alarm bell central, Phil. And this is the 2-week correlation between the SPX and basically the 1 month 25 delta call volume. So a lot of times what these guys are doing is they've been buying calls. All of a sudden they just stop, Phil.
Right.
And these, markets don't die. Just like anything, the opposite of love isn't hate, it's indifference. The same with the market. There's nobody now. Everybody's been pushed up on the shore like a super high tide. Everybody's been pushed up onto the shore, but there's nobody now to take the water, okay? And those people that are now stuck are going to get washed out with the tide coming back out. And that's what this means. When this happens, it's about an 80% correlation, but I would think, Phil, the level of intensity that we've had, probably a good bet we're going to see some market selling over the next 2 to 3 weeks.
I agree. And also, too, like you said, the level of intensity or how high that spike is a measure of that correlation that's normally there. So when that correlation breaks, you get this whipsaw up and down. So the higher the spike there, the more immediate and deeper the move is. So what's interesting is that we've got a higher reading than we had seen before COVID and a couple of the dippy doos that we saw going into late 2018 into 2019. And as most of you guys know, we're way over fair value, right? And breadth is basically in a spot where we see it roll over, like it's overbought essentially. So there's a lot of things in this market that are just really, really over the skis. And, if it was a quantitative easing environment, like you look in the middle of that chart there from, 2021, mostly how it was just we kind of have that look. Well, the difference though is that the Fed was buying, $80 billion worth of treasuries every month and then, sending that into the markets, essentially. And that's not happening. In fact, they're rolling off their balance sheet. The exact opposite. Not only are they not buying 80 billion in treasuries, they're sucking probably about 20 billion a week out of the market. So it's almost an exact opposite effect. So it'd be one thing if that was, we're in a QE environment, quantitative easing, the Fed's backing this market, and we're not. And the exact opposite. So it just goes to show you how much more air is underneath this move than we previously had. Otherwise, I'd be full bull here and telling you, we're just going to keep marching higher, but that's not the case. So yeah, I think it's a very high reading on this correlation. The lower ones you can kind of go or it might not manifest till later, but the higher they are, usually the more immediate the impact is when this correlation breaks.
Yeah, what's that game, Phil, where everybody walks around the chairs and then they keep taking one away?
Musical chairs?
Musical chairs. That's what's happening here, guys. So they took a couple chairs away and people are still walking around the chairs, okay? And they don't know the music's going to stop. But this tells you is that we basically are a 2-week warning here that we're going to see some softness.
Yeah, and then also too, our favorite indicator fired off, right? On multiple things, but the chart we have up here is the QQQs, the Qs, and we like it when we get a Kona sell and a sniper, and that's what we've gotten here in the last couple hours on the hourly chart.
Yeah, let me just explain this too. So this is a trader toolkit, but the one line I have there, where you see the green and red, that's just a momentum reading up there. I just want to see how the momentum was playing out. So you had heat, we had a heat sell fill, we had a Kona sell, and we had a sniper sell.
Yep.
All right, and so this is like the dinner bells ringing. And then when you found that chart on the correlations, it's just screaming at you to be prepared for weakness.
Correct. Yeah, and I think even on the NQ, which is the Q's futures, I believe we had a 4-hour Kona sell fire off. Anyway, when those higher time frame fires off like that, those are very important signals to pay attention to, especially when you have other things that are correlating with, basically telling you that it's time to exit stage left. And that brings us to this next chart, which if this doesn't smack you in the face, then I don't know what does. But CNN Fear and Greed Index, the one thing about CNN, that Fear and Greed Index is something that they came up with, and it's actually pretty well respected in the industry because they have a unique way of looking at a few different things, social input, positioning, and things like that. That came from their CNN business side of things. So it's they did some homework on that one, and it's actually a pretty good indicator. And then Bob, you were explaining this NAAIM exposure index.
Yeah, this is the institutional asset managers. So they're basically, remember I talked about them being carjacked? Everybody's in the clown car right now, Phil. Yeah.
Well, and you'll notice too, since we've had the local tops here from the 2022 high, every time this grouping comes in here with these elevated, now mind you, a 93 and an 80 is the highest we've seen at any of these highs, even the bull market high. That was a 67 and an 89. We're getting a 93 and an 80 here. And it's the first one that we've gotten since the last top that we had, the top signal in February when we went down into March and then started like the last leg of this big run up. So you can't really ignore this stuff. You can't really be going in at I think day trading is fine. You can be long and short during the day and stuff like that. We were doing that today in the market. And I think especially as we roll over too, because when you roll over those transitory periods, there's a lot of just up and down movement. So you can get quick trades in and out, a lot of volatility, which is great for, trading 1 minute and even 5 minute charts. But I think right now, I think we're going to watch this market spaz out a little bit and start rolling over. But I think with the yields, Bob, and I think with the dollar, just over 99 found itself a little bit of a bottom, and we saw that today. Yields, the 10-year, you got to pay attention to, and I think as those yields crank up, you're going to see the market behave in a negative way to that yield rising. And so that's why I think we're going to go probably down into the end of the month, even though there's a lot of bullish seasonality that goes with this. But we're entering that period too, right, with OPEX next week, that period of weakness. And we typically see, we might get a little be range bound, but usually by Tuesday, Wednesday, into OPEX, the market rolls over. So I think we have a more than usual setup in that regard here.
Yeah, I mean, I'll make a few other quick comments too. Like when you see, you think these institutional asset managers are the smartest guys in the room, and they are. These guys are brilliant people, but that's not how they get paid.
Right.
They get paid by beating their peers. Okay. Right. They don't get paid on absolutely making you money. Okay. That's a private dude that you hire to try to give you absolute alpha, because they could be in there shorting, do all the crazy stuff. These guys are managing big money, okay, and all they care about is I won't get fired as long as I beat the other guy out. So if these guys are going long, they go long too, because they just don't want to have any discrepancy between their peer group. So that's why you kind of see those things matched together. And like I said, when they get so maxed out, they have nowhere else to go, and especially now, this is 2 Fridays in a row, Phil, where we fade it into the close. Okay, that's more important to me than anything else I've seen. Last Friday they did it. This Friday they did it. That means big money is expecting at some point a Sunday night massacre. Okay. And people are preparing for something. And, today, Phil, also, we had a liquidation day. Oil was down and energy was down. I mean, energy was down and indexes were down. I haven't seen that in a long time. SPY, NASDAQ, small caps, oil, all natural gas, all negative today.
Right, yeah.
And that means means somebody's pulling their horns in.
No, I agree. I think this is a good chart because you can see when the things do top out in this market. Volatility works both ways, and you can see on these down moves, we can erase a lot of what we've seen quickly. And if you look at Bitcoin too, I think Bitcoin, we were talking about that today, and people were asking, what's up with Bitcoin? Well, I think that was a failed move yesterday off all the hysteria of XRP. Twitter was just totally peak elation, and you could just see it. And like everybody was saying moon, 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 moon. And I'm thinking, this could be the local high here in this bear market. And Bitcoin, basically did a false move and came all the way back down toward the bottom end of the range, which is not what you want to see when you have a potential breakout like we had yesterday. So I think Bitcoin often is a leading indicator in terms of moves, from the bottom or from the top, and certainly leading lower. And when we were watching the bond market today, right, because the 10-year was selling lower. And right now the correlation is that bonds down, equities risk on is down, and even commodities today. And so Bitcoin definitely was reacting the way you would think. ES was trying to buck it, but then toward the end of the day finally capitulated and fell down. So I think that's why I think the yield story, bonds down, yields up, I think that's going to be a big part of what goes on. And dollar too. Dollar finally, that was a nasty move on the dollar. Not exactly sure what was up with the severity of that move, but that's hitting a big level there at 99. So watch a reclaim back over 100 and we can squeeze back up, and that's going to be hard for this market.
Yeah, and look, I bought Mara puts. We talked about Mara yesterday, and that action yesterday was I thought with Mara was kind of like an ending move, and so I bought puts today on Mara, and I also bought TBT. I bought shares, and I also shared that with our subscribers too, because I agree with you. Whatever this dollar move happened, Phil, I think they're front running the Fed raising rates again, and they were giving themselves some room. So I totally concur. I'm now my trading account is now firmly in the bear camp. I've hedged all my energy names now, even though I'm still long them. They're hedged, and I'm getting ready to see some weakness. And I think even though I can't find the data, there's talk out there about the last 2 weeks of July that usually if you have a strong first half, you get a weak second half. And that was in the back of my mind. If I can find the data, I'll share that with you guys. But we got some really cool charts to share with you tomorrow, also to help you guys be effective traders. And look, if we've been talking about this trader toolkit and our sniper and Kona and liquidity, you guys are listening and you're buying it, and make sure, check this stuff out. I mean, this stuff, what you pay for these tools is nothing compared to what you're gonna make using them. So take advantage of them. Call in, check out, ask for the promo code, and get a really good deal on these things. We're raising the price on all of them. These things are becoming really popular. Get in ahead of inflation on those. So just go to tradelikeagenius.com, tradegenius.co. Take advantage of it, especially before Saturday. You can catch the promo code. With that, Phil, I'm done. We'll catch you guys tomorrow.
All right, guys, thanks for watching. Please hit like and subscribe. Let us know your thoughts on the current state of the market. Love to hear from you, and we'll see you on the next video. Take care.
Trade Genius.